in just a moment. All right. So I said that we'll be talking about quarter point theory and then my daily range cycle concept. And just get yourself ready because what you will learn today, beyond just understanding entries, very much important is understanding where to find and wait for your entries. And I will be teaching you guys every single thing about that today. All right, so get your notes ready, get every single thing you need ready, and let's dive right into it. So, what is quarter point theory? Or what does quarter point mean? Or what is quarter point and why do we trade them? All right, so let me present and we'll just look at it and then head into the charts for go into the charts for examples, right? And then we're going to begin to plot those levels. So to read with me, the quarter point theory, all right, proposes that every significant price move in currency exchange, you know the meaning of forex. Forex simply means foreign exchange, and it majorly deals with two currencies. They always have to be two currencies for that exchange to happen. All right, so it's the exchange of one country currencies like to another country currencies. Example, we have the Euro USD, that is the Euro against the US dollars. We have the GBP USD, the pounds against the US dollars, the Japanese yen against the US dollars, or whatever it is you can think of. All right, so there will always be that exchange. That is what makes up the forex market. In the financial system, you have the FX market, you have the crypto market. There are about five sectors in the financial system globally. And out of that five sectors, you have the FX, which is the foreign exchange. People that trade the foreign exchange. You have people who are into cryptos. Cryptos is the most recent one. Before there were four of them, but cryptos was recently added. I think 2 years ago, or 3 years ago, they added crypto to the sectors in the financial that make up the financial market globally, or that make up the global financial market. Okay. Before it was just the forex market and a few others that I'm going to mention, but now we have five. So making it the forex market, crypto market. Then you have the commodities market like US oil, those that trade US oil, that trades iron, that trades gold, that trades all those things. They're categorized under commodities. Then you have those who trade the stocks. You know what stocks are, right? Then there are those who trade the bonds, the government bonds, and other things that have to do with that. So these are the major five sectors, of which the largest sector in the financial market is the forex sector. You have over $10 trillion circulate in the forex market on a daily basis. Over $10 trillion circulate in the market on a daily basis. Then after that, you now have other sectors. For the crypto sector, I think it's about $660 billion. So you can see the margin is very big. So, but then in some of the quarter point theory, it talks about currency exchange. It's not just for currency exchange. You can use it also for commodity, but it is best with currency exchange. All right. So, but you can use it for commodities also. So the theory proposes that every significant price move in currency exchange rates takes place from one large quarter point to another quarter point in gradual increments of 250 pips. Take note, in gradual increments of 250 pips, the range between two large quarter points. The large quarter points serve as constant support and resistance level, as well as familiar or invariable price target. So a bullish breakout above a large quarter point is expected. Take note, a bullish breakout above a large quarter point is expected to target the next large quarter point above, and a bearish breakout below a large quarter point is likely to challenge the large quarter point below. When a targeted large quarter point is reached, the large quarter point is considered to be completed. If prices fail to complete a large quarter point, the unsuccessful completion of a large quarter point usually causes a reversal that takes price back towards the preceding large quarter point. Now, what this is trying to explain to us is basically support and resistance. Now, as you can see here, serves as all these quarter points serves as support and resistance. That is why I told you guys that I am a support and resistance trader, right? Now, but then in a refined way. So now this quarter point makes us to understand that there is a large quarter point and a smaller quarter point. The smaller quarter point moves in a gradual increment of 250 pips. The main quarter point moves in an increment or have to do with a too large range of a 1000 pips. So a quarter point, the large quarter point range have to do with a 1000 pips range, but this 1000 pips moves in a cycle or in a gradual increment of 250 pips. Now, 250 is a quarter of 1000, hence the name, the quarter theory. All right, 250 pips is a quarter of 1000 pips, hence the name quarters theory. So now we get to understand that when there is a breakout above a particular quarter point, the next quarter point is your easiest target. You just know that price should get there. It's the easiest target. Now, imagine having to target 250 pips in a particular move or 1,000 pips for a larger quarter point. So I will show you how this quarter point functions. I will teach you how to plot the quarter point. We'll take one or two examples on how to plot the quarter point. And I will now go down and teach you my daily range cycle concept, and we can see the applications of it there. Okay? So now let's get to chat and let's study. So we're going to be using, let me show you the large quarter points for the assets I have here. As you can see here, I have my JPY futures pairs here, JPY futures and JPY basket, then a plain chart for all my JPYs I trade, then my daily cycle range levels plotted here, and my quarter points levels plotted here. So let's use the JPY, the GBP JPY for a study, and let's do this study on the daily time frame. Okay? So I told you guys that a quarter point have to do it, right? It have to do it price moving from one particular significant level to another particular significant level over a large range. And this large range is 1,000 pips. But in that 1,000 pips, price will always move in an increment of 1,000 pips. We always move, I mean, in an increment of 250 pips, not 1,000 pips. All right. The larger range is 1,000 pips, but price will always move in an increment or in a cycle of 250 pips. Now let's take an example from here, or let's go all the way behind here. So you can see now what I have here, this black line to this black line is an, oh, no. Please don't annotate on my screen. Obina, somebody Obina, is it Awuzi Obina or something like that? I don't know if I pronounce the name well. Careful, is Obina. Careful, okay, so you don't annotate on my screen. So this quarter point level to this quarter point level, which is this black line you're seeing here, makes up 1,000 pips. So the move from here to here is 1,000 pips move. That is the larger range cycle. As you remember the definition of a quarter point, now it has the larger range cycle where you see price move, but then it moves in an increment of 250 pips. So this is my major large range quarter point, this black line to this black line. That is a 1,000 pips range. Now, this is a 500 pips range. So that means from this quarter point level to this quarter point level is a 500 pips range. From here to here is a 500 pips range. Then, as we read in the definition I gave to you, quarter points, just as the name is, moves in a quarter of the larger pips range, which is 250 pips. So from here to here is 250 pips. From here to here is another 250 pips. From here to here is another 250 pips. From here to here is another 250 pips, making it in all 1,000 pips range. Okay, now let us watch price reactions. Can you see that every single time you get a breakout above a particular quarter point level, you are rest assured that the next 250 pips level is going to be tagged as a target. Even if in short, majority of the times, what you will get is that the larger pips range, especially that 500 pips range, is usually almost assured that once price moves out from a particular or bounces from a react, or let me use the word react now. Once price reacts from a particular level of a particular quarter point, you are rest assured that it's getting to at least 500 pips. But then instead of you having those larger targets, it moves in an increment of 250 pips. You are just rest assured of that. Okay? Sometimes you also get 1,000 pips move. For example, you know that from this line, this yellow line to this yellow line is 1,000 pips move. Immediately price bounced off from here. Can you see how those major reactions usually come within these quarter point levels? Now, I did not just wake up to plot these levels. These levels are plotted in specific price points, or sorry, in specific price points, which I'm going to be teaching you in this class. And we're going to plot some of those levels using about 2 or maybe 3 chart examples to plot those levels. Okay. I'll teach you why your level should be where they should be. You don't just wake up and start looking for anywhere to plot those levels. No, the levels have a meaning. Let me look for something just to show you guys something why these levels plays a major role. Okay? I'm going to be sharing this with you guys now. Now look at this. I'll need, sorry, copied text. I'll need a plain chart right here. So let me see. Control V. Now look at this. This was published on Forex live stream, all right? And it's something that is open even in the banks. They use this in the banks, all right? In all banks, they use it. So one of the things you will notice here is that this, for example, this was for last week, Friday, financial institution and bank orders for all the currency pairs, you know. For example, Euro USD, majority of those orders, about $1 billion or billion euros, was pumped or priced at 1.1500 levels. Now, these numbers are real. It's not forged, okay? They publish it every week. Now, there is something about the banks that whenever they want to take a large order concerning something, it's made open to all the banks knows. It's made open to financial institutions. It's made open to anything that you want to know concerning the global financial market, okay? It's made open there. So even if you browse it, you can get this information every single day, every single week, exposing the bank orders. It's not even an expose, it's something that should be done. You realize that whenever these guys want to buy or place a particular order, they use specific price points, like 1,500.1475, 0.1350, and so on and so forth. Okay, look at the USD JPY, 0.143, 0.142.00. Now, all these JPYs, they usually like using whole numbers, like the 0.000, whatever levels they are using, and many other of these orders. Now, you realize that these orders helps us a lot. Those orders was what lead us to, the plotting of all these levels, and I will teach you how to do that shortly, okay? But before we get into that, let me explain the price reactions. Can you see how, for example, price journeyed rise from this level? You got your evidence that, okay, fine, analysis is that it's bullish, you want to buy. Now, you remember yesterday we spoke about directional bias. You've built your directional bias. The next question is, how long should this buy even happen? I told you guys that one of the easiest ways is 50% fibs of your monthly dealing range cycle, if you remember that yesterday. Now, in today's own, instead of you targeting that length, you can use this for easy targets. Immediately price moved from here, we saw them come next into these levels. And right from that levels, we saw how they bounced off from this level again, straight to these levels. We got some reaction again from this level into the next, a little retracement down here into this. From these levels, when they were retracing, they came back into these levels. Can you see the reactions from this level to this level? Can you see where they even retraced back to? Now, today's sales, can you see the reason why I was looking at today's sales? Immediately price came into this level. Can you see why it gave me, and I had that interest that, look, okay, where we are now is a very critical level for price to come to react from. And if you use banking orders, the way the thing happens is that once the banks place an order over a particular level, usually, even if price is not at that level at the moment, you usually see price journey back into that level to react so as to activate their orders to now begin to go down to or move in the direction they want to move. And these levels are plotted with the most consistent orders that the banks use. So even if a major sales wants to happen, I'm pretty much sure that we should see these guys come into these levels, then I can find my entry on the lower time frame and ride it straight into the other levels. The trade I sent today, for example, gave about a 1 to 4 risk reward in just one day. Now, can you see how if you even try to swing this to this level or any other level you can think of, how many risks reward you would have potentially gotten from that price action? Now look back in the past, see all the price reactions from one level straight to another level. This is already about a 500 pips move because all these lines you are seeing here are 250 pips moves. So this already on its own is about a 500 pips move. Immediately we got here, we saw the rejection. Immediately price broke past this level, confirming that, okay, this is support on. And remember, in the document I showed you guys, I told you that each of these levels serves as those institutional support and resistance levels, where once you get a break above those levels, you can expect a retest into the next level. So you got here, price came here, let's say there was resistance right here. They broke past it and broke back all the way, turning this resistance to support. Now they are retesting this particular level again to now lead us to the next bullish price action. From here, 250 pips, 500 pips, 750 pips movement from this particular point. And this was from 22nd of April to the current date, not even current date, 22nd of April to about 12th of May. You already got a 750 pips move. 0.1 lot size on a 750 pips move. That is 0.1 lot size is $750. All right. One lot size on the 750 pips move is about $7,500. 10 lot size on that is about $75,000. You get that? 0.01 lot is about $75 or something like that. That's the least lot size is about $75. So you realize that in this system, even if you want to become a swing trader, it's easier for you to become a swing trader because you know that I am waiting for the daily to give me a good evidence of a break in a particular level. And based on structure, based on bias, I can swing it into the next 500 pips level. I can swing into the next 1000 pips level. I can swing into the next 250 pips level. But then I am an intraday trader, so I don't need to be swinging into 500 pips levels, 500 pips levels, or any of all those levels. I'm more interested in getting my target on a day-to-day basis. And I know that consistently, at least in a week, I can get 1 to 2 rigs to reward 3 times in a week. If it is 1 to 3 rigs to reward, the same thing 3 times in a week. There are days you even get more than that, but you can consistently get a 1 to 2 rigs to reward. And I will explain that concept when we now dive into our daily range cycle. All right, that's when things will now even become more interesting. Because, okay, fine. I know daily bias. I can identify my directional bias, no problems. Now I know how to use quarter point levels that, okay, based on my directional bias, I should expect that price should journey from these levels to these levels. Now, let me show you something. Um, Look at this chart on GBP JPY. Remember, based on monthly time frame now, on the daily time frame bias, we are bullish. Why? Price created higher highs, higher lows, and higher highs. So we are still respecting this daily range, just as I taught you guys yesterday. The question, how far will these retracements go? Or should I expect to see these retracements to now start looking for more evidence? There are several ways you can know that. Number one is your order blocks, and maybe those of you that trade order blocks, imbalances, and all those things, no problem. But one of those strong ways that usually don't fail is your quarter point theory. And can you see where these retracements happen now? This is a plain chart for just normal analysis. Look at where these retracements happen, where price came into, and we got all those retracements that led to this bullish price action. Check it out here. This is our quarter point levels on the GBP JPY. Can you see exactly where they came into? Is it not your quarter point levels? Straight into that levels. So yes, we are bullish. Price began its retracement. I can wait right at this quarter point levels to find my entries to take price all the way to the upside. So let's say you waited on the 1 hour time frame for just a normal 1 hour time frame break of structure and retest. Right? Just a normal 1 hour time frame break of structure and retest. Can you see your normal 1 hour time frame break of structure at that key levels? You got it here. A 1 hour break. They came back here to retest that level. SL right below these lows. And target easy 25 pips, which is going to be this. And overall, ideally, we should be targeting, and this 25 pips is already giving you a 1 to 4 rigs reward. So you can see that that is a very easy money trade. The next levels you can target is even these levels, giving you a total of about a 1 to 8 rigs to reward. But we are not yet there. We are still dancing within these levels. Look at the sales that happened on GBP JPY today. Where did they happen from? These levels. It is one thing to spot out these levels. It's another thing to understand the applications when it comes to now entering the market using these levels. And that is why, in so much you're learning this, don't just jump up and rush out to say, okay, let me just pro these levels and once price come there, use it. Now, I want to sound this disclaimer. I'm glad that everybody can hear me clearly, and I want to sound this disclaimer. Quarter point don't work on its own. Quarter point is only used or is best used as a confluence. Don't just wake up and start trading quarter points. You just wake up, mark out line and say that I trade quarter points. That once price come here, I buy. Once price come here, I sell. You will wound yourself. Quarter points are best used as confluence, and majority of the time they give the best confluence for directional bias. They give the best confluence for potential areas to enter, whether you're a swing trader or you're a day trader. They give the best when it comes to identifying those um, zones or points of interest where you can enter the market, and also points of interest where you can exit the market. They give those best calls or confluence when it comes to how long the retracement or an expansion should happen. Maybe how far can the market buy before we begin to see some retracement, and where can they potentially retrace to? Quarter points can help you answer all those questions. So quarter point on its own, you cannot use it. You have to use it in how will I say it now? You have to use it as a confluence to another system. So there is a system you have, and quarter point is a confluence. And that is why you started seeing me teach you guys market structure, which is the foundation, is needed. I also taught you guys how to build a bias. Now I'm teaching you guys quarter points. You must stay true and follow to even the next day, and also follow to how we can apply and put all these things together to now make an informed trading decisions. That is why you guys will come. And I'll be telling you stuff like, you guys should be careful on the JPY. I'm beginning to expect some retracement right at where we are now. Because where we are gambling a whole lot of things at these levels. So begin to watch out for some retracement. And it is simple. The quarter point helps me give those calls. All right, I can easily tell that, okay, based on the quarter point. Let me bring out a markup that I shared with you guys. That is going to be very, 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 very far now. Getting that markup is going to be very, very, very far. I don't know where I'm going to see it. Uh, I hope I can find it. Let me see this. I will find it, just a moment. All right. Good, I found it. So in just a moment, let me close this and let me share this with you guys. So now this is our free Telegram community, right? On 15th of May, I shared that we should keep an eyes. Now, that a break, let me pull out this again for us. Let me pull out this. Now, remember that I said that if you can see a bullish price breakout above a large quarter point level is expected to target the next large quarter point above, and a bearish breakout below a large quarter point level is likely to challenge the large quarter point below, right? I remember mentioning that to you guys, and this was one of the trades. JPY basket in conjunction with higher time frame bias and in agreement with the daily time frame bias, this was one of that large quarter points. Now, can you see that the closest quarter point here, this black line, I told you guys, is my 100 pips, 1,000 pips range black line, all right, levels. And I was saying, if price, based on the other confluence, all right, daily time frame is bullish, other time frame, monthly time frame, daily range, and all those things, if we should get price close above this, just know that our next target is this. And there is nothing that is going to stop price from getting there. So it gave us a very strong bias that, okay, fine, based on that, we can now potentially look out for sales on many of all those assets. And you see when the movement began, we broke past that levels, and you can see how the movement continued. Now, take a look at this. Sorry, just a moment. Let me drop this here. Now, take a look at this. Can you see exactly, this was that level where I called out, and can you see exactly where we journeyed into? And straight from there, we failed to get there. And in that particular video, not video now, sorry, in this particular case, slide, I was telling you guys that when a targeted large quarter point is reached, the large quarter point is considered to be completed. If prices fail to complete a large quarter point, the unsuccessful completion of the large quarter point usually causes a reversal that takes price back towards the preceding large quarter point. Can you see exactly what happened here? Immediately we journeyed from here. Just a moment. All right. Immediately we journeyed from here. We knew that our next large quarter point should be this. Price failed to hit that particular quarter point. And based on that, where did you see them? The retracement happened straight back into the preceding quarter point that began that move. And now we are trying again to get back all the way to that upside. Can you see how quarter points can serve as a very strong confluence when the application is understood? If you know how to properly apply quarter points, right, you would be able to use it effectively in making informed trading decisions and what you can potentially expect. So, in so much that, yes, many persons are talking about look for sales, look for sales. For the fact that these levels or this large quarter point cycle has not been completed, there's a chances that price will want to do so many things here. At least let them complete this cycle before you major retracement. Now, that is just the basis of quarter point that you should know. Like I said, you don't just trade quarter points on its own. You use it as a confluence. And I will teach you guys how to use those confluence. I will teach you when to apply it, how to apply it, and how to utilize the information given to you by quarter point theory. But before we go into that, let me go ahead to teach you guys how to plot a quarter point. All right. So we're going to be using GBP USD because I've plotted on all these major assets. I don't want to delete them. We're going to use GBP USD. I think I have already a quarter point on GBP USD plotted. Let me see. Do I? Oh, I already have. So let me delete it and then plot a new one here. Let me delete and plot a new one. I'm seeing so many things on my screen. I don't know all those annotations. I was seeing them plenty here. I don't know who annotated it, but let me just clean it. All right, so let's now plot quarter points. But if you're with me up to this point, kindly drop some 1-1s on the chat box. If you're confused, you're lost, drop some 2-2s on the chat box. Let me be sure that we are following together, okay? If you guys are confused, or if you're with me, if it's all clear to this particular point, drop some 1-1s on the chat box. Let me be sure that we are following. If you are confused, you're lost, drop some 2-2s on the chat box so that I can take your questions and then give you clarity, okay, so we can proceed. Okay, I guess we are all together in this. All right, thank you very much. So now, let's proceed to draft our quarter points. Clear, just missed yesterday. And don't worry, the recordings, like I said, is going to be sent to you guys at the end of the bootcamp, free. All right, no strings attached. You're not paying any money to access these recordings. You will get them free of charge, okay? So that is just what we're doing for the community. So just stay to the end of the bootcamp. You can follow from now and don't miss any other day, and you will get it. So when plotting quarter points, the best time frame to use for plotting quarter points is your weekly time frame. Emphasis on your weekly time frame, okay? You want to open your weekly time frame chart. Now, the first thing you want to plot, when you've opened your weekly time frame chart, the first levels you want to plot are your large quarter point levels, which is the 1,000 pips level. Now, question, where do I start plotting this quarter point from? That is one of the major questions majority of the persons have that have taught these questions. So where will I put the line? Is it that I will just carry my line and just put here? I said no. So when you want to plot it, because of the bank order concept, this is where you will plot from. Go to this price range right here and look for the nearest whole number. Like, not the nearest whole number. Now, how will I say it now? The largest whole number that you can see there. For example, you have, if you look here, you have, let me use annotate now, all right? If you look here, sorry, just a moment. I'll mess up with my chart layout now. Let me increase this for you guys. I'll come back to where I was. All right. So you can see the levels very, very well. I'll mess up with this now. So if you look here, this is the weekly time frame. You will see 1.3200. You will see 1.400. I mean 1.34. You will see 1.28. Then you will now see 1.3. The best whole number here is the 1.3. You know, after 1.3, you now see 1.2, 1.4, 1.5, 1.8, and so on and so forth. After 1.3, if there was a visible 1.0, that is the one we want to choose. So you want to choose that whole number that looks, I'm looking for the right word I'm going to use, but I'm lacking the right word. I don't know if the right word is the nearest whole number, but I don't think the nearest whole number is that right word. But I just want to look for that largest whole number. And the largest visible whole number we can see here is 1.3, not 1.32. 1.32 is not bad, but we can see the 1.3. That is the one we want to go. If there was a 1.0, like I said, we will use the 1.0, but we cannot see that here. After 1.3, the next one we can see that is here is 1.2. So that now becomes the quarter point levels that we want to start plotting from. So you want to go into your chart, the information's right there, and then you plot from the nearest, short from the, let me use this word. If there is a word like that, from the roundest whole number, if there's something like that, okay? So that's where you want to plot from. That's just what you should know. That's where you want to plot from. So please let me restore my chart. This thing, please, back to where it was. So as I was saying now, as you can see here, that large number is 1.3. This was the 1.3, right? That is one of the most visible things. You can double click on the line. Once you drop your line, and I'm using the line tool. If you come here, you will see the line tool, right? That is what I'm using. This horizontal line. That is the tool that I'm using to plot this level. And like I said, you will need to give it different colors to indicate the larger pips and the smaller pips. So in this case, 1.3, we put it there. You can come to coordinates and edit it to be at exactly 1.3 levels. And here, I'm going to be giving it black. All right. So you can click here. You see the settings. You change the color from purple to black. Then change the size from 1 to maybe 3. All right. So in this case, I've done that before. And I named my own alpha. So you can see it. 1.3 levels. Now, after the 1.3 levels, the next 1,000 pips is going to be 1.2 levels. Now, this is where 1.2 is. See 1.2 levels. You have 1.2, then you have 1.3. Can you see that? I got that exactly. Now, you will notice that from here to here is 1,000 pips. From that 1.2 to 1.3 is a 1,000 pips move. Then the next one you can now plot, you can now look for the 1.4. See where 1.4 is. 1.4 is all the way above here. So you can just arrange the coordinates, and that is 1.4. Then another thing you want to do, so that you don't mistakenly move this tomorrow, you lock the chart. Look at, if I don't lock the chart and my mouse mistakenly come there, the line will just move. And I don't want that to happen. So what I will do is just to lock it in the settings here. Once I lock it, no matter what I do, I cannot move that line. All right. Instead, if I touch the line, it will only move the chart. So you always want to lock it. But I'm not locking this particular one now, since it's a sample video, okay? So after plotting it, you've plotted the larger quarter point ranges, which is the 1,000 pip range. The next thing you want to now identify is the 500 pips range. Now it's easier. 1.2 to 1.3 is 1,000 pips. 500 pips is going to be 1.25. Simple mathematics. All right, just divide that by 2. So you get that to be 1.25. And you change the color. So in my case, I'm using yellow now. You can choose any color of your choice. So I know that the distance from one black line to another black line is 1,000 pips. From this black line to this black line is 1,000 pips. But from this black line to yellow line is 500 pips. Same thing here now. I will now come here. This is going to be 1.3500. That will make it, that is where the 500 pips, midpoint of this 1,000 pip range. So, and can you see how we journeyed exactly from here to here? Do you now also know that this yellow line to this yellow line is 1,000 pips move? So imagine on GBP JPY, directional bias clearly is bullish. Now see something very much interesting. Let me show you guys. I taught you guys yesterday on dealing ranges, right? Imagine marking your dealing range from that highs to these lows. All right. You now go down to the daily time frame, and the daily time frame has given you your daily break of structure, which they gave you right here. If you turn to line chart, you will see it clearly. You can see that daily break, right? So imagine from the month of July. No, okay, this is January, sorry. You waited for price maybe you engage in this particular buys, only for price to now come to this particular quarter point. Now, let me delete this. This is that 500 pips quarter point. You see how they were bouncing off from it. And finally, they broke past that quarter point, indicating that next target is your quarter point. Did you know how many days from the day they broke this to the day they got to the next quarter point is 23 days? That is almost a month. All right. In that one full month, if you had gotten a good entry here, you know you can swing this trade, and this is about 400 and something pips move. 0.1 lot is already about $400. Easy. Some of you that work, the salary they pay you is not up to 400 and something dollars. And you can enter it, even if it is only one trade you take in a month. Trading just one quarter point levels from that quarter point levels can pay you better than what you get from your monthly salaries. Okay? So, but then, like I said, we don't just trade quarter points off just quarter points like that. We use it with Confluence, and I will teach you those Confluence. So we are still plotting. Can you now see that these guys, from these 500 pips, they even moved to give you a whooping 1,000 pips range. So you can easily use it for directional bias and also as Confluence for targets. Okay? So now we've plotted our 1,000 pip range. We've plotted the 500 pips range. We now have to plot what we now call the quarter point. The quarter point will now be 250 pips because 250 is a quarter of 1,000. So what would you now do? From here to here, you look for the 50% of it. And easy math. Here you have 1.2 to 1.25. So to get 50% of that is going to be 1.225 if you do the math. Those of you that are mathematicians here, you understand that if getting that particular level is difficult for you, you can use this tool and mark it here. From here to here, you can see 250 pips. You see that number right there. From here to here, 500 pips. From here to here, 1,000 pips. Okay? So now I'm using blue line for my 250 pips range. And can you see how, let me show you something now. Before I get to this 250 pips, let me show you something here. Can you see how if you are using just the 1,000 pips and the 500 pips range, you can see that, okay, you would have waited a long time. But because the quarter point theory, just as the name works in quarters, price move in 250 pips ranges. Can you see how that 250 pips range would have given you even a more precise entry compared to you waiting for the 1,000 pips or the 500 pips? So you see how you can even use it to refine those entries and targets even more because they move in that cycles. This next level is going to be 1.27500. All right, for the next quarter point. Then same thing applicable here. 1.32500. And same thing applicable here. 1.37500. 1.37500. All right, that will give us the quarter point. So you can see that these lines, like I told you guys, I did not just plot them out of the blues. I plot them based on specific price points. First thing you want to do, plot your 1,000 pip ranges. After your 1,000 pips, plot the 500. After the 500, you now plot the 250 pip cycles and look at all the price reactions. Just go down to the daily time frame and see how beautiful this is on GU. Can you see GU? Journeyed from 1. Now, look at that retracement I told you guys that price was struggling on that 500 pips. Can you see where did they retrace back into? These levels that now led to this new break, straight back into these levels. Can you see how they are journeying from one level? Now, we've broken above this level, retested these levels. You know that GU, we easily target these levels. So when you now come online on Twitter and you see somebody saying, keep an eye on 1.375 levels, GU is getting there. And you think they are doing one kind of mathematics like that. It's not necessary. Some persons use psychological levels. Some others use, I used to do it too. Just to sound smart, only all this kind of thing. It's sweet to sound smart. I'll be like, guys, watch out for GBP USD from 1.27500 level. Any entry you find there, enter the trade and know that we are targeting the next 1.3500 levels. And sometimes when price completes that cycle, somebody will be like, how did you know? I'll say support and resistance. So that is all we know. You know that kind of thing. And that is the right answer to give. What else will I say, Kwano? So the understanding that this is just it, it's just quarter point cycles. Knowing that price will journey from one level to another level, we use it as confluence. And once I monitor price reaction in a particular level, I can easily tell the next level that price is heading to. Like once price has given me that reaction on a lower time frame and I see what price is doing there, I can easily tell what next level you are going to. So now the question is, what are the reactions we want to watch out in these levels? How do we use them with our daily bias? How do we now use, okay, daily bias, monthly delay range? What reactions exactly do we want to see in this level before we engage in the trade? How do we know that this reaction will hold price to take price up? Or how do we know that this reaction will hold price to take price down? How do we engage in all these things? This is where putting it all together will come in place. And we'll discuss that in the last day of the bootcamp. Now, the next thing, tomorrow we're going to be talking about the entry techniques and how to use the entries with these quarter points and all those things. So time has failed us. We might not be able to look into another asset. All right. I would have loved to use another asset to draw a quarter point for you guys. But I'm just only going to draw the 1000 pips range and maybe the 500 pips range. You can just go ahead and follow the same technique to, what is this? Sorry. You can follow the same technique to now draw yours too. So coming here, this is Euro USD, 1000 pips range. The closest whole number we can see here is, if you look at here, this is, we have 1.1 here. All right, there is a 1.1 there. So that is where, that is the most, if there's a word like that, like I said, the round number. All right, that is where it is. So from 1.1, we want to look for, going down, we'll be looking for 1.0 watts now to get 1,000 pips. So 1.01, right, will be that 1,000 pips. I think so. Let me see. Just a moment. From here, or if the math is going to confuse you, once you get a whole number, use your tool and plot 1,000 pips down. You will easily get where the round number should be coming into. So did I get this? Oh, I didn't get this. Oh, so the round number. Okay, sorry. So what I was doing. So you have 1.00 here. Look at the 1.00 level, yes? And after 1.00, you have 1.1. Then from 1.1, the next level you can find is 1.2. So that is your whole numbers. And if you check this, these levels are 1,000 pips apart. So you can see the beautiful swing from here all the way here, beautiful 1,000 pips. All right. Now, the next thing you want to plot is your 500 pips. So 1.0 to 1.1. That means our 500 pips is going to be 1.05. You look for the 1.05 levels, and that is going to be a 500 pips. So you add this here, yellow line. So you know that every yellow line you see is your 500 pips move, okay? And you can see it. Can you see how price journeyed from immediately they broke? Now look at the beautiful thing there. Just like we got in GU. Large support and resistance zones. Immediately we got price breaking above that support and resistance zone straight into the next large quarter point to tell you that the cycle is completed. Now, EU has moved from the month of March to the month of April. In the space of 1 month, they gave you 1,000 pips. If you enter just 0.1 lot, that is already $1,000 in 1 month. That is 1.6 million naira. And you can imagine the job you are doing, okay? Now, I'm not downplaying. Look, jobs are important, okay? Now, earning salary is very much important for the sake of stability. It helps because the market is very risky, so you need it. But you can see that with less stress, you can swing this position and utilize the trade when you want to swing. But then we are day traders. If you want to become a swing trader, I can show you how to even use this very well. But if you want to become a day trader, I will also show you how to use it. We'll study that by tomorrow when we're talking about entries. So now the next levels we want to plot is our 250 levels, right? 250 pips. So that is going to keep us here at 1.25. So 1.25 is 0.025 is going to give us that 50 pips. For clarity, you can use the tool to measure it so you will see it clearly. And can you see ping pong? Where did they come to exactly? This is now why you understand why bank orders happen the way they happen. The next 250 pips is going to be 1.0750. Can you see exactly where that rejection happened from? So quarter point helps a lot. Gives you those accuracy where price should exactly turn from. Immediately they broke past it. Where was the retest from? Here. And we got that move. So you can see how these things works. I'm not going to go ahead to plot all these things for the want of time. We've not even gotten into our daily cycle range and already 1 hour past, okay? So quarter point makes a whole lot of sense when you know how to use it. So today we're talking about plotting those quarter points, what it means, and how they function. I will teach you how to utilize it with our trading system. I will teach you how to use it to form a proper analysis. I give a disclaimer again. We don't trade quarter points on its own. We don't trade quarter points on its own. We use it as confluence for our directional bias. We use it as confluence to our various individual strategies and any other thing you can think of. Now, quarter points, like I said, it also works on gold. Now, if you trade gold, those of you that love trading gold, you will see, I don't know where I plotted it. I don't know whether it's on Oanda. Did I plot it on Oanda or so? I've forgotten where I plotted my quarter points levels. Is it on Oanda or was it FXCM? I plotted it on gold before. Right, I plotted it on gold. Now, you see, for gold, I'm not using the 250 pips move. Why? It's of no use. Because it will make the chart messy. Gold is a very heavy asset. So they can give you 1,000 pips move. Other assets can give you 2 months or 1 month to give you 1,000 pips move. Gold can give it to you in one day. It can deliver 1,000 pips in one day without stress. That is just that Trump coughed. It has given you 1,000 pips. So it is a very, very heavy asset. And you can see we use them for target. Now, if you go down to the 4 hours time frame, can you see how those quarter point levels have been reacting on gold perfectly? So even if you're a gold trader, is it not as simple as this is previous support and resistance, price broke above it, came back there to retest next levels? Is that not easy? And also, okay, fine, look at these levels, look at where they rejected from. Immediately they broke past these support levels, same thing applicable. Now, can you see where these guys are retesting from? You know that obviously gold, we should see gold head into this next level, and possibly this level, and possibly these levels. So even if gold creates a new all-time high, you can easily predict how long the all-time high is going to be. For every single time gold creates an all-time high, they always target the 1,000 pips range. Always. Look at this. Let me mark out the next 1,000 pips. Like this is 3.5. So from 3.5 to what? 3.6 is our next 1,000 pips on gold. 3.600 is our next 1,000 pips on gold. So you know that even if gold clears these highs and wants to create an all-time highs, you can be rest assured that all-time highs will span at least 100. So even when there is no previous price action, you can easily tell where gold is going to go. Simple 1,000 pips move. Now, if you follow Kojo Forex, those of you who know Kojo trades quarter point, but he doesn't mention it. One of the days he was doing something online, and then he posted this chart and instantly deleted it. But then I saw it. So I looked at it. I said, look at this guy. This is pure quarter point. You hear him say something like, if you follow him on Twitter, you hear one of the days on Twitter, sometime early January, he said that any trade you're getting now from the month of January, just know that gold is hitting 3,000. And when he said that thing, I said, it's easy. And who we know that gold will hit 3,000 from where we are. It was an easy target. Now, this was the 3,000 levels. Where was 3,000 levels? This was 3,000 quarter points level, somewhere around there. So as of January, when he called out that January price was here, all right, this was somewhere in January. He said, look, if you're taking a trade, just know that gold is hitting 3,000. It was an easy hit. It was a very simple target that we know because we know that after they clear these all-time highs, wait for them at 3,000 before you start seeing any major pullbacks. So quarter points guides you for targets even when you're trading in all-time highs. So it works for gold, It works for oil, it works in forex pairs and any other asset as long as that's candlesticks. Quarter points works. So I've spent the 1 hour explaining quarter points, how to plot this level, why they work, and how to interpret them. You cannot learn it all in one day. Those of them in my academy, I taught them quarter points for more than 2 weeks, explaining and breaking it deeper and deeper and deeper and deeper. All right, so you cannot learn it in one day. For over 2 weeks, I think we're talking quarter point Ds, daily cycle ranges, and all those things. And because of the want of time, so many of you here will be going to work tomorrow, and it's already after 10. We're going to be ending. What is the difference between Forex and futures? Almost not different. Let me show you this. Look at this. See the Euro USD. This is the Euro USD chart. FXCM. This is Euro USD chart, daily time frame, right? Take note of this chart, Euro USD. Now this is the Euro futures. Euro futures is going to be 6 E like this gets Euro futures. Look at the Euro futures. Can you see what is the difference between Euro USD and Euro futures? Let me bring out the Euro USD. Look at Euro USD chart and look at Euro futures. Compare the two of them. Let me turn this to line chart. Let me turn this to candlestick. Candles. Okay. Why is the candles like that? Who is doing? Sorry, let me change this color. I don't know who gave that colors to these candles. Pink. What? Sorry, just a moment. So I will show you. There's almost no difference. Literally, there's actually no difference. That's just the truth. So can you see the Euro futures and then the Euro USD? So the only difference is that, for example, in the US, you cannot trade Euro USD just as it is. You can trade it. You can trade it. Sorry, not you cannot. You can trade it. All right. But the Euro USD and the Euro futures are the same thing. All right. The futures is just when you hear something like Euro futures, it's traded against the dollar. Since the dollar is the dominant currency in the world globally, used for global exchange, every asset is traded against the dollar in the futures market. So Euro USD chart and Euro futures, can you see exactly the same thing? So the only difference is in spread. Euro USD now, you will see plenty broker offer chart analysis on Euro USD and then they can have different manipulations on that. But when it comes to Euro futures, everybody globally is seeing the same chart. The banks are seeing the same chart. You as a trader is seeing the same chart. So there is no manipulation in the future. That's why some persons like trading the futures because you are trading the market directly. But when you're not trading the market directly and you're trading Euro USD, if you just even search Euro USD on its own, yeah, this is Euro USD. You can see how many brokers will give you that. You have CMC Markets, FXCM, under so many, and all these data feeds are usually not the same thing. Look at Euro USD, FXCM. Take note of Euro USD, FXCM. Now look for Euro USD. Let me see if I can compare it with Euro USD, Pepperstone. Look at Euro USD, Pepperstone, and Euro USD, FXCM. So you see the difference now. Let me turn this to line chart. Candlestick. Oh, why are these guys always giving me this color? But fine, let's use this color. So you will see that. Let me look for that clear difference. No, they are showing me the same thing here. There's usually a very, very, very clear difference with these guys. Okay, even if Pepperstone gives the same, let's see Euro USD. This is not what I'm supposed to be talking about in this class, right? Sorry about that, but let me just address that once for him. Candles. So maybe it's not very visible here. Now look at this. Now, perfect example. Take a look at this. If you look here now, look at Euro USD. This chart here is on FXCM. The other one here is on forex.com. Can you see this gap that was here on Euro USD? Can you notice that it was not here on this particular asset? So this gap is just one of many examples. Look at this gap here also. It was also not here on this asset. All right. So when you look at Euro USD and you're analyzing Euro USD, people will always, the broker data feeds always differ. That's why one broker might not stop you out with spread. Another broker will stop you out with spread. So the question is, when trading, what is the best to use? I use FXCM. FXCM has been proven to be that particular, they've been proven to be that particular broker that gives a very close to a perfect representation of what the euro futures give in the futures market. All right. So that is the difference between the two. They are literally the same thing. All right. But in some cases, like the JPY futures trades opposite of the USD JPY. So if the JPY futures is buying, you want to be selling. Why some others, they are the same thing. The Euro USD is the same direction with the Euro futures, but some futures we trade opposite of the currency. So, but we're not diving into that, and that's what we're looking at. So, guys, tomorrow many of you will be going to work, and we've not been able to look at daily range cycle. So in tomorrow's class, we're going to start with daily range cycles. As you can see them here, quarter point levels. I have my quarter point levels up here that I plotted. And after my quarter point levels, I also have what I call my daily cycle range levels. These daily cycle range levels are now what will also help us to align ourselves. You can see those levels, right? I'm going to explain how to plot those levels, why those levels are important, and how you can utilize them, okay, for making very much informed. Sorry. Oh, no, 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 network, don't do that now. Network, not now, not now, not now, not now.